Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you as always for coming on the program.
Good afternoon, Devin.
Well, let's start with the U.S., where stocks were lower again on Tuesday ahead of a speech by Fed Chair Jerome Powell that could give us clues about how fast they're going to raise interest rates. On the S&P, we saw gains for sectors including energy, real estate, financials, and industrials, but those were outweighed by declines in utilities and consumer staples. What's the story in the global markets?
U.S. stocks closed mostly lower Tuesday as investors eyed protests in China and pondered what Federal Reserve Chairman Jerome Powell might say in a coming speech. Even with continuing conflicts between U.S. and China, U.S. economy still depends on China as a largest trading partner. The S&P 500 slipped 0.2% and the Nasdaq lost 0.6%. The Dow Jones Industrial marginally added 0.01%. Mr. Powell is set to speak Wednesday at the Brookings Institution, the last major scheduled speech for the Fed officials before the next rate-setting meeting on December 13th. Whatever he says could be a preview of that meeting. There is some concern that a hawkish tone from Mr. Powell on Wednesday could undo the gains that equities have made over the past 2 months. Stocks have already started the week on a negative note as rare protests erupted in major cities across China, spurring worries among investors about the growth and energy demands in China. In China, two major benchmarks of Shanghai Index and Hong Kong's Hang Seng Index rose today, but Tokyo market dropped today.
Well, today, Korean stocks were strongly higher again. All the big names pretty much. Gains in particular for financials and utilities. The exchange rate coming down as well. Tell us about the domestic market.
Domestic markets expanded over 2 straight days, including today. The benchmark Kospi advanced 1.6% and Kosdaq gained 0.3%. In Kospi market, foreign investors' unusual massive buy led market upside, with net purchase of 1,003 billion won, which is more than double of the regular days foreign investors buy. Positive views on Chinese economy, particularly related to lessening restrictive COVID-19 measures like lockdowns of big cities, boosted domestic investor psychology. But increasing market interest rate does not allow market to rise further. Commercial banks' average interest rate on household loan reaches about 8% from last week. All of the 20 largest market cap stocks advanced today along with the whole market, except Celltrion. Samsung Electronics rose 2.6%, and the second largest market cap, LG Energy Solution, also rose 3.5% today.
Well, China's zero COVID policies you mentioned, Professor, they've sent oil prices lower recently because of the expected impact on demand. But Goldman Sachs is saying there's a high probability of oil prices shooting up next year to $110. What do you see happening with oil prices, Professor?
Oil prices have fallen in recent months. International benchmark Brent crude futures, which stood at $100 a barrel in late August, traded at $85.25 a barrel today. Goldman Sachs' recent report says a group of some of the world's most powerful oil producers is highly likely to take further actions to stem a price decline and try to balance the market. An influential energy alliance known as OPEC Plus will convene in Vienna, Australia on December 4th, which is this Sunday, to decide on the next phase of production policy. It comes amid recession fears, weakening crude oil demand in China from renewed COVID-19 lockdowns, and as market participants assess the looming impact of a Western price cap on Russian oil. The Goldman Sachs report also said the medium-term oil outlook for 2023 was very positive and maintains $110 a barrel Brent crude forecast for next year.
Well, finally, Professor, Korea's National Pension Fund data show it's had a negative return through the third quarter of this year of 7%. So we could see the pension fund end up negative for the year for the first time since 2018, when, of course, there was a decline in stocks at the end of that year. A lot riding on this massive fund. What are the implications of worsening returns there?
National public pension is the single most important resource that guarantees the minimum life quality for all Koreans after retirement. Also, public pension fund of Korea is the world's third largest, which close to 1,000 trillion won, or $763 billion of asset under management. But there are concerns over the agency's ability to manage the fund. National public pensions asset return for this year was negative 7.1%. Until the end of third quarter, according to NPS, National Pension Service. This negative return is particularly affected by domestic stock return of negative 25% in the same period. More fundamentally, the poor return is affected by major central banks, rapid interest rate hikes, high inflation, and the war in Ukraine. In terms of asset size, National Pension Fund shrank by over 52 trillion won in the first 3 quarters of this year. National Pension Fund, however, had positive returns from foreign bonds and alternative investment like real estate investment in foreign countries. NPS says that in the same period, other major national funds in Norway, Netherlands, Canada, U.S., and Japan also reported huge negative returns between negative 4% and negative 18%.
Right. It is a concern. So much, as you say, is riding on the National Pension Fund. Have to hope that it works out in the end. Professor, let's leave it there for today, though. Thank you, as always, for coming on the program.
Thank you very much, Devin.